Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 13th of August. Starting off with the FTSE 100, which still seems to be haggling with that uptrend line there, the broken support line there from back in January. That nominal level there now up to 82.40. A couple of days ago it was 82.20. Keep hitting that and coming back. The good news, I suppose, is that we're now above the 50-day moving average at 81.95. Get an end-of-day close above that, then it may be that the market just decides to head towards the recent resistance at 8400. On the downside, below that 50-day line, there's the risk of 80.60 again, which is that May support line projection. Obviously, we overshot on the downside, but that should be established as support again. Moving on to the DAX, and the picture here, another market struggling with an old support line which has now become resistance, in this case 17,800. Below that, we've got the risk of the 200-day moving average at 17,500 over the next few days. An end-of-day close above the old April support line, and we're looking at filling the gap up to 18,000, and then hopefully even the 50-day line 18,200, but we're a bit stuck there at the moment. The Dow is next, and here we can see that we've got this market stuck at the 50-day moving average. This is around 39,500, so we need an end-of-day close above that to give us the chance of moving not only to the old mid-July support, 39,800, but obviously retesting the highs. If we do break down, it's the floor of that channel there from October and an April uptrend line there at 38,500, which is initial support. RSI failed at neutral 50, which is a leading indicator on the downside, so maybe people are more betting on the April support line and the floor of the channel at this stage. Moving along to Bitcoin, which has been rather volatile in the recent past. Here you can see that it managed to fail at the 50 and 200-day moving averages at 62,000. We're on the floor of the rising trend channel from October at 58,700, and below that we've got the risk of hitting that February support line projection, 51,800, over the next couple of weeks. RSI failure again at neutral 50, coupled with the 50-day moving average failure, suggests that we may have to brace ourselves for another move into the low 50,000s. Star of the show at the moment is gold, and here it was suggested or predicted that this market could hit 2,600 by the end of this month. Until yesterday it was looking a little bit optimistic, but now we've had our close above 2,500, things are looking rather more chipper. The other technical plus point, a very big plus point, is that we've had 4 bounces off neutral 50, which you very rarely see, and that should be enough to give us 2,600. If it doesn't, one would want one's money back. On the downside, the floor of the channel there, 24.15, and that should hopefully limit any pullback that we get, but not expecting that at the moment. Moving on to the stocks, and some better news from Bluejay today, and that's been enough to get the shares to gap to the upside through a rising 50-day moving average, which is very encouraging. End of day close above that 50-day line at 0.38, and we're looking for the 200-day moving average at 0.44 as a minimum initial target. So let's see if we can do that. It's also a bear trap gap reversal, so bear trap from below the late July support, 0.35, and then gapping up. That tends to be a decent signal. The other point to note is the way that it was a failed gap fill, so there was a gap up at the beginning of July, and we didn't manage to fill that gap, which is a sign of strength, and that underlines the prospect of the shares having another go at the 200-day moving average. The stock which is intriguing is Capital Metals at the moment, and here the reason is that we had the floor of the gap there around 1.5 pence. We keep bouncing off the floor of the October gap, and that is also a sign of strength, but we haven't actually managed to have much upside here, but still looking for the old support there for the shares from October, around 2.5 pence, and the 50-day line just below it, and ideally that happens by the end of next month at the latest, if we're lucky by the end of this month. Obviously we don't want to see an end of day close back below 1.5 pence and the gap floor. Moving on to Goldstone, which has become a bit of a pet project here. The reason is that we've got a very steep rising trend channel, and the shares have managed to stay within that, which is very unusual. Looks like a proper re-rate is happening here, but the only missing ingredient is an end-of-day close above the 200-day moving average at 1.85. If we can get that, then the next target up is as high as 2.8 pence, and looking for that by the end of next month, or hopefully even sooner than that. Ideally, we stay on the right side of 1.5 pence, which is the floor of that channel. Moving on to Helium One, which at the moment is, I suppose, still waiting for its big helium find, but in the meantime, we've got the shares crawling up the floor of a rising trend channel there from back in June. The missing ingredient here is an end-of-day close above 1.5 pence, which the shares have been trying to do for the best part of a month. The initial target here would obviously be the 200-day line at 1.6 pence, but ultimately we're looking for 2.2 pence by the end of next month. We haven't been above the 200-day line though since last November, so this is probably why the shares are looking rather sheepish at these levels. Ideally, we stay above 1.2 pence, whatever happens here. We've got a rising 50-day line, which is helpful and explains why the shares are making so much effort to go up. Onto one of those more slow situations, which is Just Group, and here I'm just showing it really to show off in terms of the shares hitting the top of that rising trend channel from back in 2020, that £1.38 the number there, and above that we're looking for a fresh target, and that would be as high as the line I'm drawing at the moment, which is heading towards £1.65. Obviously that might take 2 or 3 months to materialize, and ideally there's no break back below the top of today's gap, £1.28 in the meantime. Jersey is next, and here you can see that we've got potential rebound for the shares. Early days yet. Obviously this share has been hammered by the change in the political situation over the last month or so, as indeed as most of the rest of the country. We've got the chance though of a push up to the 50-day moving average at 93 pence as a best case scenario target, while we remain above the old support there from July at 69. So we need an end of day close above 69 pence to then open up a move up towards that 50-day line. Or obviously a rather difficult call there, but worth having a look at least, keeping an eye out for that. On to Landore, which I think there's been stake building here, and here what's interesting is that after a couple of times of trying to sustain the 200-day moving average, we've now bounced off it, and that's become support. End of day close today above a rising 50-day moving average would be a decent signal for a retest of the 5 pence plus area by the end of this month. So hopefully third time lucky there for the bulls, and I believe there's stake building going on there in the background. Moving on to Neo Energy, which was featured here on Friday when the shares were just breaking their 50-day moving average for the first time since May, and it was suggested that shares might be able to head up to 0.52, which was obviously a rather modest target at that time. Current situation is that we've managed to melt through the 200-day moving average like a blowtorch through butter, and nearly hit the next target there at 1.2 pence, November resistance line projection. Hopefully we'll get to that 1.2 pence over coming days, while we remain above the old resistance area around the 0.85 to 0.9 pence area. So that's hopefully where the shares will find their support on any pullback. On to Predator, where it's always an interesting battle between the state of the chart and the possibility of a fundraise. But we had a double gap up earlier this month, and we've got a nice consolidation, sideways shuffle, and a bull flag really above the rising 50 and 200-day moving averages. That suggests that we should be able to get 15 pence as soon as the end of this month, while we remain above those two moving averages at 10 pence. But obviously it depends on the funding situation or news, of course. Shield is next, and here we're on our second target, which was 4.2 pence. Above that, looking for old support there at 5 3/4 pence, ideally by the end of next month or even sooner. What's good here is the way that the shares have managed to spend 2 days at or above the 200-day moving average. We haven't done that properly since last September, so a tentative attempt at changing the trend. On to the last two. The first one is Tungsten and West, and here we bounced basically on an old October resistance line projection at 1 3/4 pence. What's missing here is an end of day close above the 200-day moving average at 2.85. If we can do that, it could be up to 5.5 pence by the end of next month, but wait on that 200-day line situation. Finishing off with a stock which is rarely featured here, but here we bounced off the floor of a rising trend channel at Unicorn. And basically above the floor of the channel there at 6 pence, we're looking for the top of the channel there as high as 11 pence by the end of next month. Once again, the missing ingredient is an end of day close above the 200-day line at 6.9 pence, so maybe wait on that. That's it from me today. More updates tomorrow.